Happy Market Mortgage in You Monday. I'm Chris Bettis from Fluent Mortgage. Market fluently. So, all right, we're changing the format a little bit, not just market and economics, but stuff that I'm sort of sharing within offices as well. So more of mortgage related stuff and then a little bit of real estate. So kind of give you a smattering of all three. So truly realtors, Mondays are about you, right? We're just going to bless you from information from the last week. So pro tip number one, let's look at the screen here, right? And it should be a well done. And I know if you've been in the business for a while, you're like, come on, this is so fundamental. This is like negotiations 101. I know, but I literally got another accepted offer today at $399. I literally am writing pre-approval letters every single day trying to encourage the realtor to come to the right decision, right? So real quickly, $400,000 versus $399. One of these numbers is a listing price. One of these is an offer price. They're not the same. And so what's interesting is we never get this wrong, right? As listing agents, we never get it wrong. We never list a property for $400,000. Why? It feels humongous, right? We list it for $399 for a reason. It feels so much smaller. Well, think about it. When you're a buyer with multiple offers, you keep writing offers, unfortunately, for $399, which seem like really small offers, when you can offer $1,000 more, $4.10 more in payment per month. I can have a conversation with your buyers if you need it. A huge offer. So again, I'm doing this because I want your clients to win. I want you to win. I am tired of writing so many pre-approval letters, and I keep writing them over and over for $400K, but you keep submitting your offer at $399. So, hey, if you're brand new, literally negotiations 101, I know you understand why we're listing for this. Understand why you offer this. You don't offer $399, you offer $4. There you go. All right. Okay. So unfortunately, I'm going to have to say the C word, COVID. When I use it, it's not politics. It's not biology. It's economics. So we're heading on to COVID-22. Remember, it was COVID-19 3 years ago, right? Literally, I've been talking about this for 2 years. I'm seeing, and the only reason I bring it up now is there's so much chatter internationally about stripping wealth again, round 2.0, about, we are not done with the C word. That is for freaking sure. Okay, so mortgage, what's changed? So in the past, we've been able to use gift funds from the sale of home. So hypothetically, mom and dad are selling to son and daughter-in-law, gifting tons of equity, no big deal. Still can happen. Gift equity, no big deal, let's go for VA. What's changed though is if that veteran didn't have service-connected disability, remember that funding fee. So if it's second use, next time use, you're looking at 3.6%, right? So that gift of equity used to be able to use for the 5 or 10% down to reduce that funding fee. No more. So just know, if you're expecting to reduce the funding fee, say from 3.6 down to 1.6 because of gift of equity, not happening. You can still gift the equity, you just can't reduce funding fee. And also, rates are ridiculous. They're insane. So the positivity, the stuff on here that you should be getting really excited about, rates are ridiculous, right? So just, if you want to see daily, not just weekly from me, just bookmark on your phone or on your website, fluentmtg.com. I have a bunch of realtors who do this. Literally, you can see very quickly for VA conforming what's real. So at 225 today, man, rates are so good. Literally, I have to give $3,600 back. So literally, if a veteran took a 2.25% stick built, $400,000, I'd have to give them $3,600. So usually at this mark though, it's just, hey, if they got closing costs, let's go. That's the mark. At the second number, so at 275, or for a civilian loan 3125, that's me paying all their closing costs for them. So in this case, at a 275, $400,000 transaction, standard size loan amount in Eugene, I'd have to pay them, not a buy down, pay them $10,000. At a 2.25, I'd have to pay them $3,600 of their closing costs. So at the 275, let's go. I know we can't get it from the sellers anymore. Competitive market. I got you. Same thing conventional. So that's the really fast, easy way to look at it. Here's what's happened over the last 2 months. Like, we've definitely broke through ceilings and floors. So as we watch ceilings and floors, we've broken through. So in terms of this week right now, we're definitely seeing improving rates significantly today. I'm floating currently. We know long term, obviously, due to inflation, like we're talking long term, right? Like a year down the road, probably significantly higher rates, 1-2% higher. But if what I'm thinking is going to come to fruition, hopefully not, COVID 2.0, whichever iteration you want to call it, doesn't matter, COVID 22, whatever. But the second, truly, economics, not politics, not biology, but economically, just like last time, remember I told you months before, almost half a year before anybody else was saying it, they're going to strip the world's economy, right? They're talking around 2.0. So they're going to grab a lot more wealth. We're going to see some major things happening economically. So that's the biggest prediction for us in terms of what the future is. So in terms of rates, though, I think rates are going to get better. I think we're going to see another dip. We've seen a significant dip if you look at right here over the last 3 months, and especially over the last 2 weeks. So realtors, again, this is really about you. Check with whomever you have pre-approval letters with. Literally, the leverage is greater. You should be buying more house. So that property maybe before you're like, man, we found the perfect place. They just couldn't pull the trigger. Call them back. You can afford more house today than you could 2 weeks ago. So there's the good news for you. So mortgage market and you. Don't forget to like, subscribe, share. Hope you take advantage, and we'll see you next week. Chris from Fluent Mortgage, Market Fluent.